And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Happy Friday, everyone. Welcome to the Market Forecast. Friday, June the 17th. My name's John Hoagland. Thanks for trusting me with your time. As always, focus is context. First, risk management, and always remaining patient. Hope you're ready for the weekend. Hope you had a good week. Hope you were successful. My goal this week was not to lose money. I succeeded at that. Even in Make Hoag Money, I think we broke even. We tried a couple of times yesterday to try and get into some shorts. We did not get filled, but that's okay. We got next week to turn some profits on Make Hoag Money. We opened the forecast this morning as Chairman Powell begins to speak at some conference somewhere. I'm not quite sure where it is. 8:15, we're waiting for industrial production, which may be a fruitful number for some activity. And at 9 o'clock, as we used to say on the trading floor, misleading indicators is due out. Don't forget, it is quad witching today, so there may be some market gyrations around expiration. As far as stocks, we're set to open with a little bit of a bounce to the upside, with the focus, of course, on Powell industrial production, expected to be at its lowest since December. Russia continues to squeeze Europe and weaponize natural gas. They've cut France off completely. Crude prices have traders focused on an important inflection level, that weekly kickoff level. 114.60. It's right about where it is now. And as we wait for the rig count later on this afternoon. Now, the rig count historically hasn't been all that big of a deal, but with lots of focus on increasing production, I think more eyes are on it. As always, make sure you like, share, comment, question, feedback is always welcome. Heckling is always good. I do enjoy a good heckling from time to time. Love is always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notified when we do go live with our many daily events. As usual, checking the VIX down about 3%, 31.91. The dollar index strong this morning, up almost a full point. 104.6, and the yield on the 10-year firm at 3.2%. Good morning, everybody. Brian is the first one in the room. Brian wins the prize, dead letter opener. Good morning, speculators or spectators, whichever you choose to be today. Charles March, good morning. Shaw, good morning. Terry King, Tachyon, James, good afternoon to you. Scott saw and he conquered. Glitter Sandwich, good to see you. Dan Trader, Bill Phillips, Sarah Hall, good morning. Prayers and love to you as well. Theo, always a pleasure to see you. Alfred Santoro passes micro step 2. Realized this time, and I love this statement. I think this is a wonderful statement. Realize trading 2 or 3 lots that the profit targets can be reached as quickly as trading 5 lots. Plus, smaller has a certain calm. Calm, that has a nice ring to it. Love it, Alfred. Everybody congratulating Alfred, which is wonderful. Glitter Sandwich saying it felt like S&Ps were scraping the bottom yesterday, but can't figure out why. Maybe it's your spidey sense telling you something's changing down here. We don't really know, and as always, our acronym here is ACH. Anything can happen, but that feeling may be telling you something. Find a way to get into something that you can afford the risk on. Remember, think risk first, then look for your entry. Taurus trader, good morning, dead letter opener. Imagine there are a lot of short options in the money that makes that market makers might need to hedge. Equals bear market rally. Good morning, Rick, my brother. Good to see you. Love you. Dead letter opener. Alfred talking about the profit targets for the Micros Combine. Rusty Golfer, good morning to my spirit animal. Ray Trondy, my guy, my wildebeest, how are you? William, good to see you. Eric Hoagland, guten Morgen, guten Tag. Dimitar, Rob T, my goodness, it's good to see you. I've asked Ray. I don't know of any Eric Hoaglands. I know there's an Eric in the family by marriage, but his name's not Hoagland. Monday off, Captain Price. Yes. Welcome to market hell. My goodness. Market is tanking as Powell talks. I'm going to take a look at this. Yeah, our beloved Chairman Powell. Well, we do have some overnight longs in the market, and it's up against an important inflection level. We're going to see all this on the charts. Trading research, Stephen C. Matt Hoyt, my brother from the trading floor. JNR, good to see you. Brody, Manuel, Caesar, it's always a pleasure to see everybody. So, Monday, there's abbreviated markets. It's in celebration of the Juneteenth holiday. I'm not going to be in the office on Monday. We're not going to have any kind of forecast recap, and we're not going to have group coaching on Monday. I hope that that's okay with you, and we'll just resume everything on Tuesday. So again, no forecast, no recap, no group coaching on Monday. I'm treating it kind of as a holiday, and so I'm going to take a little time. We're going to have a little bit of a long weekend this weekend, and I kind of suggest you do too. El Rufo de la Perla Trading, welcome. Good to see you. Thanks for popping in and saying hello. If this is your first trip to the market forecast, welcome, and make sure you can say hello. So we've got the S&Ps coming off their overnight highs prior to the regular trading hours session. Yes, another short week. Yeah, and this is one of those holidays where it happens on a Monday. There's abbreviated sessions, and it's a non-settlement day. So that always throws a little bit of a horseshoe into the charts for me because there's no settlement on Monday. We're going to be following today's settlement all the way through Tuesday. It's one of those kind of goofy situations. Is it going to affect the charts, or is it going to affect your trading? Unknown, but we just have to remember that Monday is not going to be a settlement day. There won't be any information as far as open interest from Monday. There won't be any news settlements on Monday. No volume information on Monday. And so you just got to kind of keep an eye on that. We're going to be through expiration for, well, I think crude expires next week. We'll be through expiration for our equities. We've got rollover in nat gas next week, and then we can kind of put rollovers away for a couple of weeks until the crude rollover comes, as it does every month. So let's jump in. We're starting to look at the daily chart in the S&Ps. Here we go. Thank you, Brody. All right. Discounting the rollover / expiration effect. The estimated open interest says we added 46,000 yesterday. Now, there was a big miss on Wednesday's estimation as to what the open interest is, and that should tell us really how kind of complicated it is even for the exchange to come up with the accurate open interest information. It becomes even more difficult during rollover, which makes it even more difficult for us to use that information to our advantage. But we've got maybe about 450,000 contracts left in the June contract, and I would say most of those are going to expire and settle in cash. So for all intents and purposes, our rollover is pretty much over. So I'm going to take this increase in open interest yesterday on the breakout down below the weekly kickoff low. Not only that, we saw some pretty substantial divergence in delta. I'm going to show you that here in just a second. I'm looking at this move to the downside yesterday as new business, new bets to the short side. Whether it's long time frame or short time frame, how do we know? We don't really know. All we can do is take the information that we have and make a hypothesis or an assumption. So when we look at this, we've got weekly kickoff low still in play here today, just to kind of point that out. And I'm very, very curious as to when the options expire. We're going to have a lot of short options. We're going to have a lot of puts that are in the money. Those are going to establish short positions when they are exercised in the underlying contract. That may bring in buying power as the day goes on, as those that are being exercised into outright positions want to cover them. I'm sure that they're hedging now, and how much they get hedged is going to have a lot to do with how crazy or not crazy the expiration is going to be. Sometimes there's just a little bit of a whisper and then it's all over. Sometimes it gets a little bit crazier. But we've come a long way in a short period of time, so I'm going to be peaked and making sure that I'm protecting myself against any vicious opposite moves. Bear market rallies can be vicious and nasty. Being Friday, quadruple witching, in the money puts being exercised, and the fact that we've come a long way to the downside in a short period of time. If I were short for the last week, I'd think about taking some off today, and I wonder if others are. So, chilling was chilling with Dylan, right? No, Glitter Sandwich, feeling like maybe we're scraping a bottom yesterday. I'm getting that same sense or that same kind of feeling. And my goal this week personally was not to lose money, and I'm not going to lose money today or this week. I know that much. So I'm going to just stay cautious and patient and wait for something to tell me what the market is telling us what it's trying to do. It's up to us to gauge how good of a job it's doing getting there, thinking about the risk management, thinking about the points of invalidation first, and trying to get into these trades as close to those areas of invalidation. If I go looking for trades today, I'm going to find a whole bunch of crap ones. If I'm patient and I wait for the right thing to say, this is your opportunity, then I may be able to have a really good day. So, on to the 30-minute chart. Here's the activity we had yesterday. We opened spanning weekly kickoff low. We rejected above it, and we started pushing lower. 1, 2, 3, 4 sessions, 4 30-minute bars were largely one-time framing to the downside, while delta increased in value. Delta is telling us when it's increasing in value. Okay, it got up to around 15,000 after the first couple of hours, but price was moving in the opposite direction. Delta is it's a number that's the difference between the number of contracts that are traded on the offer. So a market order buyer increases delta in positivity, a market order seller selling into the bid is negative delta. When price moves lower against a rising delta, you would think because the more aggressive traders are buying, that price should move forward, and that's where we get the indication where we may have longer, stronger sellers in the market, and the longer, stronger sellers aren't using market orders to execute their inventory adjustments. They're using limit orders, and those limit orders will replenish and replenish and replenish. And as soon as the shorter time frame community decides they're not going to buy into that anymore, the longer time frame will bring those offers lower, and we'll start helping them accumulate their inventory at that point. And as we give up there, they'll move those offers lower, and we'll try buying those. And as the longer time frame traders are the ones who really move these markets, we have a market that's moving against the more aggressive traders, which would be the market order buyers, because we know they're market order buyers because we see delta increasing while price is going lower. I call that snake in the woodpile, and something you don't want to try and fight. So how do we make an assumption then that these were longer, stronger traders doing that? Usually in this situation, you're going to see the market resolve to the downside by the end of the day, which it went down here on the 130 bar. We exhausted our sellers down there, and then we ended up bringing price back into the middle of the range. When we see this, when we see a delta divergence, and sometimes these divergences can go all day long, we look at open interest the following day. When we see this, a delta divergence, and there's an increase in open interest, that supports the idea or the assumption that we saw longer time frame traders adjusting inventory. Whether that was getting out of longs, it's not, because we had an increase in open interest. That's what tells us there's a possibility. Nothing is ever finite or perfect in futures trading, but there's the distinct possibility that longer, stronger sellers accumulated a new position. And that new position is only in the S&Ps. Many of them are so hedged into everything, they have to adjust inventories. What I do like about this is the fact that it ends up usually getting the shorter time frame community too long, and then you have the capitulation late in the session. Now, this capitulation happened early, so we always seem to get that push back. So when we see delta divergences, it's an indication of possible longer time frame sellers in the marketplace. Are the big players are always hedging this against everything that they're doing. They're always hedging. They don't, half the time they don't even care if they lose money on this. But it is a new accumulation in longer time frame of a short position in the S&Ps. I find that to be important and useful information as a day trader. We had overnight inventory to the long side. The market opened at 5 o'clock here, and it traded up to here. We have an important inflection level, the weekly kickoff level that we could not hold above yesterday, that pushed this market lower. We traded back to it in the overnight, accumulating a long position. Already our overnight longs are bailing out. They're reconciling those positions. They could take price right back to settlement, which puts us right in the middle of value, which tells me I'm just going to stay calm and wait for something better to occur. When we open it in value from the previous day, I think there's a high probability that your better trade location, the best trade location of the day, which we have no idea when and where that is going to come later in the day. Okay? Yes, my pleasure, Dan. Whenever you see that, there's a snake in the woodpile. And then the question becomes, is that snake going to be in the woodpile all day long? And that's when I add another kind of trading colloquialism. If Elvis leaves the building, it can change the whole picture. And we don't know that Elvis has left the building until we take out the high of the session. Yesterday, it seems Elvis never left the building. Elvis pushed it. Elvis sold it against longer time frame buyers, backed off, moved his offers back up here, and then we get the capitulation of all of those longs saying, you know what, this is not going to work. We're going to get out, and they put in the low of the day that way. This is how we create late spikes as well. The late spikes are, of course, movement in one direction or even range bound. And at the end of the day, you extend the range and you don't have time with which to accept that new price level. So it's all about where you open up the next day. Jack, my pleasure. All right, let's move on to crude oil. I've gone way past the opening range here, but let's take a quick look. Opening ranges have been tough lately. It's a pretty big opening range. We got 30, 40 points, and it did look down below the opening range first. Well, let's take a look at what that tells us. We had a failed downside auction below weekly kickoff low yesterday, in my opinion. Now, it was rollover, and discounting rollover, we lost about 14,000 in open interest on this. Really looking like a failed attempt to continue to the downside. This market did not sustain price down there. It ripped the other way, indicating possible short covering at this level. So instead of a healthy downside auction, we ended up with a unhealthy downside auction and a potential short time frame low here. Okay, so the new low, lower open interest, and again, we're discounting the fact that it's rollover. This was not a healthy downside auction. Look at it on the 30-minute chart. Now, the majority of the downside auction happened in the overnight. There was an attempt to try and push price or continue to push price lower that failed. Took us right back to where? Weekly kickoff level here. So here we go. We've just opened. We had some mixed overnight inventory. I don't see that there was really anything to help us here. The market is pushing back inside the value area from yesterday. What does that tell me? Better trade locations are likely to come as the day goes on. Now, the market loves to make a liar out of me. So we've been looking at this area as an area of repair. We went through there the other day. Another way that this composite profile can become even is the way it's doing it now. It's extending time and volume down here. And if we can even out this profile, I say we're going to be looking for a new area for two-sided trade to occur. Now, this is a longer time frame look at this. We're looking again at the 30-minute chart. There's no real overnight inventory. We're in range, we're in value. I'm going to try and stay patient and wait for better trade location. This red line is the value area low from the last 8 to 10 sessions. This is the value area high from the last 8 to 10 sessions. We've got weekly kickoff low right between them. This is the point of control from the last 8 to 10 sessions. They're not going to be all that useful for us possibly today. Ray, that's a really good question. When we have an emotional move, look at this. I'm going to just skip to the euro here. Okay, this is the delta for the euro. Delta did not really move all the way up here. There was some changes in it, but I wouldn't say that this was a delta divergence by any stretch. This big trending move is very emotional. There's lots of areas of single TPOs. The volume profile is very toothy, looks like Dracula's teeth. This is an emotional move where all time frames act in concert. It's emotional. You can almost just think about what happened yesterday. You had people climbing over each other to try and get this thing bought yesterday, all day long, bottom to top. When there's no delta divergence, it's telling us that all the time frames are acting in concert to push price higher. Okay, Brian, this is volume profile. This just stacks up the volume at each price so we can see where more activity happened here, less activity happened here. Okay, so when we see delta congruent with direction, all time frames acting in concert. When we see delta even, most time frames are acting in concert. It's when you have delta divergence, when you have short time frame traders getting stuck. If we saw this move to the upside and delta was dropping, this move probably would have exacerbated itself even further to the upside, because that would have indicated a long-term buyer in the building. Elvis is in the building. There's a snake in the woodpile, whatever we want to call it. And at the end of the day, they may have the short time frame pea shooters like me so short that we got to flatten up at the end of the day. That would have been a late spike to the upside, which we almost did. We didn't really truly do that. Okay. So great question. Let's check out, where were we? I don't think we did the Nasdaq yet. I'm getting a little long in the tooth here, but the Nasdaq's largely the same situation. We have, over without the benefit of rollover, discounting that information, we added just under 5,000 in new open interest to the downside yesterday on higher volume. Higher volume, of course, it's rollover. The volume is still moving into the September contract. One of the things about the S&Ps and the Nasdaq, which glitter sandwich, you might like this. These whole moving averages. This is a 9 session, this red one, and this blue one is a 13 session. I keep them on this chart because often they're going to preempt a change in momentum. Okay, momentum. The fact that the calls are now below price and the 9 session has crossed above the 13 session indicates that this move to the downside, maybe just for a short period of time, might be exhausted. It might be exhausted. So when you were feeling yesterday that the S&Ps were scraping along the bottom, there was something to that, in my opinion. You gotta listen to those things. And those that think that controlling emotions are possible in short periods of time, I think you can. Deep breathing can help you make better decisions. But using those emotions to your advantage is an excellent way. Emotion, energy in motion. That's what these markets are. So with the hulls below price, and all of these moving averages are lagging indicators. They're based on what has happened, not what's going to happen. But when you see that they're now below price, that can be an indication of potential slowing of momentum. Here's the daily overnight, or the 30-minute overnight inventory to the long side, already almost back to settlement and almost back to the low of the session, back to where the market started the night. This has been reconciled as far as overnight inventory is concerned. Now that puts us right back into the middle of the value area where we can remain patient and look for better trade locations as the day goes on. Gold. Good news. We added 3,500 in open interest on this move to the upside yesterday. The bad news, we didn't really bring in any new volume. And now where are we? We're right smack dab central in the area of balance that we've just tried to break out of and failed. Not all that exciting if you ask me. Looking at the 30-minute chart, overnight inventory, no. And now we're right back in the middle of weekly kickoff high and low. We're right back in the middle of last week's range. No overnight inventory. Almost feel like yawning. That said, the market loves to make a liar out of me. We kind of already looked at the euro. Here's the daily. Lower volume on this push to the upside. And again, we did add, I think, some open interest. Yeah, estimated 2,800 additional open interest off the weekly kickoff low. That was a pretty good shot down there. Prices now, again, back to the middle of the range. It's very similar to the gold situation. We had the big up day in gold yesterday, big up day in the euro, back to central location. Overnight inventory is short here. This is a very toothy profile. Opening inside of it indicates potential repair. What's repair? Well, we're going to maybe go down and check the high volume node that is the point of control. We've already checked this high volume node in regular trading hours. We haven't checked this high volume node yet, nor have we checked this high volume node yet. There's lots of holes. There's lots of missing teeth. Repair, the price can come down and recheck those missing teeth to try and fill them in. Remember, markets are extremely visual. The markets are looking for areas. And if traders are looking at it, they're going to have price go that direction. To the 10-year, losing 40,000 in open interest yesterday on this push to the upside. Not necessarily healthy for the upside auction. Up days, weak upside auction. Last week's low, somewhat pivotal for us today. We 1, 2, 3, 4, 5. So that's last week's low. It kind of is our high for this week. If it remains the high, that could be an interesting area for an execution. To the 30, overnight inventory is flat. How do I say that? Well, the market opened the overnight session here. It's there now. It's not how far we are from settlement. It is where the market opened the overnight session, which was right here, and we are there now. No overnight inventory. We did open with a gap, but nobody seemed to care. There's no overnight inventory. If there's no longer time frame interest in this market today, it's not going to do much. Now, fascinating market, the nat gas. We've broken out below our bear flag. The upside auction failed to bring new business, lost 8,400 in open interest, failed to increase very much in volume. But again, we are coming into rollover, so we got to make sure and not discount that information. Fundamentally, this thing should be screaming, but it's not. Technically, we've broken out below our bear flag. Any opportunities to look for an execution along this lower trend line should be welcomed. Here's the beginning of the flag. Here's the breakout point. that could, without doing the actual measurement, that could take us down to probably come and recheck these naked points of control that remain from so long ago. All right. This is a great question, Juan. Yes, there is a reason for that. For some reason, using a couple of different platforms, the TS Trader Delta that you're using and that I'm using, it starts at 8:30 for the S&Ps on a different platform, and it starts at 8 o'clock on TS Trader because it's more accurate. I look at the Delta on my other platform as gospel. I think it's the most accurate one, which is the T4 platform, but you don't need it. It's very, very close to the TS Trader Delta number, usually within just a few digits, okay, a few numbers, 10, 15, 20, when you started on TS Trader at 8 o'clock instead of 8:30. Now, that was shown to me by one of my coaching family members, and I've watched it, I've checked it out, and it actually works better if you do it that way. Yes, it's option expiry today as well. It's equity indices, equity options, weekly stock options, and some other thing. It's quadruple witching. So, and I always forget what they all are. I just know that it's here. Okay, we've got about 7 minutes before the equity open. Have a nice weekend. Have a great day trading today. Hopefully there's going to be some good opportunities that are going to speak to you. Make sure that you be kind to yourself and be kind to others. And say a prayer for world peace. And I find that there's a word that stuck in my head last night that I wish for everybody in this crazy world, and that word is civility. We can just be civil. We can be okay. So say a prayer for peace. Deep breath time. Stay humble, grateful, and creative in your trading today. Manage risk first, profits later. Have a great day. Blessings to you all. I'll see you on Tuesday as just a reminder. So have a great weekend. Take a long weekend yourself. Blessings.